What's up, guys? Bill here. Welcome back to another Watchlist walkthrough. Hopefully everybody had a great holiday weekend. If you're new to the channel, Watchlist walkthrough is something I do each week on Tuesdays where I just go through the trades I took that day and I make sure to talk about setups I posted publicly on Twitter, but also the setups I post privately in my Discord. And if you're returning to the channel, but you haven't subscribed yet, please do. I had a bunch of views in December, one of my best months of the year, but 80% of those views were coming from non-subscribers. So if you like the content, please subscribe. It makes it easier for you to find the videos in the future. But let's jump right in. We'll start with SPY. I've been bullish on SPY for a while. If we look at the daily, my thesis has been for a while that we're going to make all new all-time highs by January OPEX, which is the 19th of this month. And after a little bit of a sell-off over Christmas, we're back on track here. Back above the EMAs after a quick two-day close below the 20. SPY on Monday basically got back all of its losses for 2024 in one day. And now we've got this kind of pseudo inside day set up for going into Wednesday here, holding that 9 EMA. But let's talk about how I traded SPY today. What I wanted to do at first, guys, is look for a pullback entry. And one thing you'll notice is yesterday was such an awesome trend day, right? And we don't get those very often. When we do, and I'm looking for continuation of that trend, potentially the next day, I like to draw a fib from that whole day's range. So in this case, low to high. And I look for a pullback. Now you can look for a pullback to anywhere in the golden zone, which is the 50 all the way down to 786. I usually like to use the 618. We did test the 50 today, and that would have been a killer entry. But I was being a little more patient. I wanted to see that 618, and then I was going to have my risk be this positive GEX support at 470, but we never quite got down there. So what do you do when you have an idea of where you want to get on a stock, but it doesn't come to you? You either don't take the trade or you go to plan B, all right? Plan B for me is opening range breakout, okay? So if you never heard of an opening range breakout, I have videos on those. You can check them out. First 15 minutes of price action high and low is these orange lines. That's what this opening range is. And I'm looking for a close outside of the high, and we get it here, and I'm entering. I like to use the 10-minute confirmation. As you can see, this is 7:10. So even though I'm on the 5-minute chart, this is your 10-minute close, okay? And it's not too extended. So I'm just going to hop in right here, and I did. And we got a nice pop right away to 473, where I took my first big scale. And unfortunately, we got stuffed there. And I got stopped out on the rest of my position. Usually once I take my first major scale, like a third of my position, I set a break-even stop. And so I got stopped out. And then about 20 minutes, 30 minutes passed, and I started to notice that a bunch of what Traditix calls bullet or bearish signature prints came in. Now, they call them bearish or bullish based on whether the print's price comes in above or below current price. You can't predict whether these are actually sells or buys, so the name might be a little misleading. But what we do know about these is there's a lot of liquidity there. So these prints came in like it was somewhere between 500 million and a billion. I can't remember. They disappeared after they were filled. But what it tells me is there's a bunch of liquidity up here. They came in at 474.70, which is just 10 cents above our previous day's closing price. I was already bullish on the day, right? I had already taken one trade, got a little profit, got stopped out. I see these prints come in, and now it gives me even more reason to be bullish. Why? Because price tends to gravitate towards liquidity. And now we have a ton of resting liquidity up here at 470, 470. And we also have a gap to fill. We gap down in pre-market, right? See? Gap down, faded, almost $3. Now, another thing to know is SPY gaps, going back 5 years of data, when they're between $1 and $3, a gap down fills the same day it happens 55% of the time. Now, that's not a huge edge by any means, but I'll take any little extra edge when I can get it, especially when it's lining up with a thesis I already have and other data and other technicals, right? So all these things are starting to hit for me, and they're on my side. So what do? I get back in on this retest, low volume retest pullback to opening range high. Here's my second attempt at calls today, and this is the one that, you know, is going to make your day, right? Easy, nice, smooth move on the 10-minute with not even a single red candle until we're basically filling that gap. We're 23 cents away. You know, at this point, I'm out the majority of my position, leaving some runners. We start to flag, okay? And then we finally get this pop that ends up filling the gap, triggering those sell orders, those dark pool prints that came in, the signature prints, and then actually kicking off a good opportunity for a short. So let's talk about why this is a good opportunity for a short. For the same reason that I was interested in targeting calls to this level, you could look to take a short on the touch or sweep of that level, liquidity sweep, right? All those people were waiting to sell here. That's why they came in above price. People wanted to buy down here, just like I did, and sell up here. So as you can see, as soon as price wicks through here, what happens? Volume increase, notable, right? Biggest volume pop in the last hour and 10 minutes, okay? You can get in on this touch and you get a nice, let's see, 470, 470, potential of about $1.30 move, you know, on the shorts. And that would have been a day-making trade, 2 trades, very simple, low stress on SPY, even on a day where there wasn't a ton of range. What do we have, about $3 of range all day? But hey, you can make it happen if you're patient and you wait for the entries and you have your thesis and you don't hesitate, right? You don't hesitate on that retest. You don't hesitate to buy when we sweep this dark pool. You got to have your conviction and follow it. What's the worst that can happen? Your stop loss gets hit. You know, you just practice good risk management. Now, let's see. If you wanted to really get back into a trade long after that rejection, there was an opportunity drawing an intraday fib to play it off the 50. I like to play the 618. Same like I was talking about earlier, even though it was a whole yesterday's price action, I would have waited till 618 here, but look at that, to the cent right off the 50 for a nice pop back to previous day's closing price there. A nice $1.40 move. There was great opportunities in SPY today with limited range, and that's awesome because that doesn't happen all the time. A lot of times you just got to kind of sit on your hands and watch it chop, and if you try to get too aggressive, you get beat up. All right, so that's SPY. And next, let's talk about the play I posted publicly on X yesterday. That was PDD. On the daily chart, I'll talk about why I like PDD. First, it's a peg, power earnings gap here, you can see. If you're not familiar with power earnings gaps, I have videos on those, check them out. And it's just been so strong, guys. It's in a nice little uptrend. Look at the volume. Let's talk about volume profile analysis, all right? This is about as pretty and clean as volume, or not volume profile analysis, excuse me, volume price analysis, okay? This is about as clean as VPA is going to get for bullish, right? You get your big power earnings gap volume, and you get an eventually, you know, kind of tires out after a couple days up and comes back down on low volume. And then when we bounce, more volume, right? Nice volume on the big bullish moves. We start to consolidate again, decreasing volume, pull back, another uptick in volume. Boom. Now we have a couple touches here. We're building a bottom of this ascending triangle, kind of envision 150 being the top of the triangle. And look at more volume on the third test of it, more volume, right? Fourth test, more volume, low volume pullback. I mean, it doesn't get any better. This is textbook volume price analysis and what you want to see to have conviction in taking alongside trades right now. And, you know, in a market that started to pull back a little bit, people started to get a little worried. Not all these plays were working. Stuff that was leading a month ago, you know, stuff started losing their EMAs and getting hit pretty hard, even if it was short-lived. You want to try to find the names like this that have the best chance of working out in almost any condition. Finally, look at the respect of the 20 EMA. When I play these pegs, I really pay close attention to the 9 and the 20 because I want to see price respect that. And this did. And it respects it really well. You're only getting little wicks below. Sometimes at these EMAs, you'll see, you know, respect, but a big wick. Kind of like, you know, on this day when it was testing the 9 for the first time. That's a pretty big wick. And if your idea for your day trade is I'm going to buy off the 9, you might get stopped out there. I mean, probably, depending on the type of contracts you buy, right? Even though at the end of the day, it ends up where you wanted it to be, you might have got stopped out and maybe missed this whole thing. So coming into the day, it was this candle, popped up, really nice day. But the thing with the Chinese names is they pretty much always gap down after they put in a nice day. So I had no interest in trying to play long over yesterday's high or anything like that. I wanted a gap down. And where was I looking for the gap down? Well, I mean, why not the 20, right? That's where it's been holding. So where was the 20 at last night? About 144, 145. It's now 144.80. That's about where it was yesterday. So I said in my write-up on Twitter, I'm looking for a pullback to get in around roughly 145. All right. Where'd we open today? 144.99. Okay, perfect, right? So I'm slapping calls at open. And as you can see, after a little bit of consolidation early on the day, it was off and running and just a crazy move. I played monthly contracts, so next week's expiry, and they went 300% on my runners. And, they were green right away. Like even some of these pullbacks, they came back close to stopping me out a little bit, but never did. And that wasn't the only way you could have played it, right? Like if you didn't want to be super aggressive and buy right off the open, let's go back to our old friend opening range breakouts. You can see here, after the 15-minute sets up, the next candle is our confirmation. Now, this might be a little bit extended. It depends on the types of contracts you're going to buy. If you're buying weeklies, you might have to eat a 10 or 15% pullback on this retest, and that's going to be up to you. But we got the pullback and retest, and it held. So if you want to be patient, you get this close, you wait for this wick down, you buy here, and look, just perfect, right? And what do we do with names that are strong? We turn on those EMAs, the 9 and the 20, and we don't panic sell. Little pullbacks like this, little pullbacks, if you're not losing the EMAs, there's no reason to be out. So just start scaling wherever you feel good. I like to use chart targets, not P&L. 150 was a huge target for me. So when this hit, I was out 90% of my position, up over 200% here. And then runners ended up topping out over 300%. This is when you start to think about getting out. You're starting to get some closes below the 9. I use the 20 as a backstop to the 9. So if I want to be really loose with my runners, I can set a break-even stop if I want. Or if I'm just playing the chart, I would probably look for either, I'd start to be concerned when we start losing the 9. Then we are retesting that big 150 level. I'd watch here in this candle. That's where I'd say, okay, let's be done now, right? And as you can see, we kind of just chopped around there the rest of the day at this confluence of the 9, the 20, and the big 150, which was the top of that ascending triangle and, a big pivot spot, okay? So that's how I played PDD, day-making trade. Let's talk about a trade that I lost on. You don't win them all, right? And it's doesn't help you to only talk about your winners and not assess the trades that you lose on. So PTON, I actually was really excited about this setup today because it was an inside day on a name that had a couple really hot days on crazy volume. And yes, there was a big wick up on that candle. But I thought maybe with everything else that had happened yesterday and the whole market kind of ripped, that maybe people would fall asleep on this name and we could get a sneaky breakout today. Inside day, and it had held this, previous supply. See all these wicks up into here that were failing, right? It closed above it and held it this day on lower volume. And so I was pretty excited to play it. Now, here's where I screwed up, okay? It's an inside day, and we got a chance to play off the low, and I didn't take it, right? I missed it. We got a chance to come down here in the morning and grab at the bottom of the range. That's usually how I would do this. But I missed it playing PDD, right? And that's fine. I was making a bunch of money on PDD. But where I screwed up was kind of coming back here and seeing it break out on volume and saying, oh man, this thing's going to go crazy, right? Just being too confident, too aggressive, kind of forgetting about how intense this 7 psych was. If we go back to the chart, let's look at 7, right? Wicks over. You can't, that's kind of where it died the other day. It's a big psych level. And obviously we never tested the second day, and I should have known better. And I should have I got suckered in by the volume, guys, to be honest. I saw that volume pop. It's even more dramatic on the 5-minute, and I was like, man, this thing's about to rip. And it just didn't. It only did not rip. It sucked all day. Like, it just sold off on a pretty decent, strong day for SPY. I mean, SPY putting in that high and tight consolidation candle, closing semi-near highs, and holding the 9 EMA on the daily. And look at this. Just crap all day. So that was a terrible trade for me, but hey, 30% loss. I had a hard stop set. It hit. You move on with your life, right? That's what's going to help you. I mean, if you can take that loss like that, and then PDD, the other trade I was in, the runners went 300%. That's 10 times the loss I took on this PTON. So you just pull your weeds, water your flowers. In other words, let your winners run, cut your losers when they give you no reason to be in them anymore. And it's not just a percentage. I said it there for a reason. I knew that if this was going to fail this opening, this inside day breakout, which it did, right? We close and then fail. It's going to hit that 30% stop, right? That's not going to trick me or anything like that. The play is invalidated here on this close on the 10-minute. For me, I use 10-minute confirmation. So you get the close, attempt at retest, fail. All right. That's it. PTON, losing trade. One last thing I want to talk about. I actually didn't get to take this trade, but it's a good thing to talk about. Good lesson here. Crowd. Very strong name lately. Former peg. And after a little bit of a brief pullback, losing the EMAs, Monday it had a great day just like SPY. And then what did it do today? It got a price upgrade and it gapped. And where did it gap over? That previous pivot. Now, I've talked about gapping goes and how I play them. And I have a video on that as well if you're interested. But basically, there's 3 types of levels that I really get excited about gap and go plays on. One is all-time highs, gapping over that. Second is 52-week highs. And the third is a previous daily pivot. And there we have number 3 there, previous daily pivot. We gap over it. And the only reason I didn't play it today, guys, is because I was hoping for a quick retest of the pivot. And I didn't get it. I should have maybe been more aggressive because it was that gap over an important level. But, again, I had my eyes on PDD. That was my top setup. So I wanted to make sure I got in on that trade off the open. And then I'd kind of assess other things. And by the time I was back looking at this name, it had already, if I recall correctly, it had just ripped off the open. Okay. So that first candle, by the time I'm looking at it, I'm in PDD and it's already up here. It's at $275 move. It's like, well, that was great. Hopefully somebody else caught it. But yeah, guys, that's really it. That was my trading day. The trades I took, trades I won on, trades I lost on, and even one that I didn't take, I missed, but was a great setup, good teaching moment. Hopefully this helps, guys. If you have any questions, just leave a comment or find me on Twitter. Reach out, DM me. I'll help you out.